Gas prices just spiked fast, and this war could hit your money next. This isn't just about oil. It could impact inflation, the stock market, and your entire portfolio. Meanwhile, at the White House, President Donald Trump said he wouldn't deploy troops, but added if he did, he wouldn't say.
As energy costs continue to rise due to the war in Iran, Israeli Prime Minister Benjamin Netanyahu says Israel will hold off on further attacks on Iranian gas facilities.
I told him don't do that, and he won't do that.
An earlier Israeli strike on Iran's South Pars gas field prompted a retaliatory attack on the world's largest liquefied natural gas plant in Qatar, a U.S. ally. On social media, President Trump warned if Iran struck Qatar again, the U.S. would, quote, massively blow up the entirety of the South Pars gas field at an amount of strength and power that Iran has never seen or witnessed before. And during a meeting with Japan's Prime Minister Thursday, the president downplayed the war's impact on global energy prices.
We thought the numbers would be worse. I thought that it would go up more than it did. But we're doing this excursion, and when it's completed, we're going to have a much safer world.
On Capitol Hill, lawmakers are pressing the White House for more information on the military strategy on the war and an exit plan for the U.S., as the Pentagon is seeking $200 billion in additional funding for the military campaign.
It takes money to kill bad guys. So we're going back to Congress and our folks there to ensure that we're properly funded for what's been done, for what we may have to do in the future.
Nearly 3 weeks into the war, the U.S. and Israel have carried out more than 16,000 strikes on Iran, and gas prices in the U.S. are up 90 cents per gallon since the start of the conflict. Erica Brown, CBS News, Capitol Hill.
As this war continues, here's what it means for the U.S. economy and investors. First, inflation could rise again. Higher oil and gas prices push up the cost of almost everything, from food to transportation. Second, consumers get squeezed. When Americans spend more on gas, they spend less everywhere else, slowing the economy. Third, expect more market volatility. Uncertainty like this creates fear, and that leads to sharp swings. Fourth, energy stocks may benefit, but most sectors won't. Airlines, retail, and tech face higher costs. Fifth, interest rates could stay higher for longer. If inflation rises, the Fed may delay cutting rates. And finally, government spending will surge, especially on defense, adding pressure to national debt. This is not just an oil story. It's a chain reaction that could impact inflation, markets, and every investor's portfolio.